Hello, everybody. Welcome back to Commercial Real Estate Secrets. I'm your host, Austin Hare. Today, our guest is Michael Fay. He's principal of Avison Young and chairman of Capital Markets Executive Committee, and is also the managing director of Miami, Florida. So, Michael, it's a pleasure to have you on the show today, and thanks for hopping on.
Thanks for having me. This will be fun.
Yeah, absolutely. So, you and I have a little bit of a different history than most guests that I have on the show. Back in my wakeboarding days, when I did that for a long time, I remember your son was competing as well. And so that's how we got introduced. And now it's kind of going full circle. Here we are in the commercial real estate world.
Well, exactly. What's fun is that the wakeboarding really covers so much ground and so much space and a lot of water to also say that. And it's fun to see all the people you met. So I was really lucky to meet you back in those days. And it was really nice meeting so many people back in the competitive days when I was a veteran wakeboarder and you were a professional wakeboarder. And I said, we cover a lot of water and a lot of space, and you get to meet so many great people. And now here we are, talking about commercial real estate, which is my first love.
Yeah, absolutely. So, how did you get involved in commercial real estate? I mean, did you ever go through the path of residential real estate? Did you know you wanted to do this as a young kid? I mean, did you know you were entrepreneurial as a young kid? Like, what was kind of the story like leading up to that?
It's funny. Since about seventh grade, I knew I wanted to be in real estate. I saw a lady sell a house back when I was 13. This was back probably 1976 or so, and she made $1 million sale and made a $30,000 commission. And I said, if that lady can do it, I know I can do it. But I never really wanted residential. It was more commercial. Always fascinated me with the office buildings and shopping centers and large properties. And so I really got into two things. One was I started really looking at real estate from a standpoint of really kind of a great career. And number two, I love the stock market. So I started really focusing on the stock market as a sophomore in high school. And then all the way through, I played basketball in college. I played basketball through high school and had a basketball scholarship to several colleges. And I focused on, basketball and school, but really my whole focus was be a millionaire by 30. And that was easily done, but it was one of those fun things. And it was all done through stocks and real estate.
Wow, that's fascinating. So, okay, you said you were in high school when you saw the girl this lady sell a house for this kind of fat commission?
I was a junior high.
Junior high, grade. Okay. All right, so you're in junior high. So you see her sell a house, she gets a good commission, that motivates you. What was your next step from there? Because, in order to invest in the stock market, you need capital. So did you start doing anything to kind of earn some money to invest?
No. It's funny, you're asking some good questions. So really effectively what happened was I learned about the stock market as a sophomore in high school. And then I started working as about 11 years old doing odd jobs for all of our rich neighbors, and which was a lot of fun. And I started just saving money and, just kind of doing that. It wasn't until I was in college, after I gave up my basketball scholarship, I started a painting company, painting homes, painting buildings, whatever. And what I was doing is hiring the basketball team players for $10 an hour and bidding these jobs out. Then I was taking all my money and investing in the stock market. I was almost one of the early day traders, if you will, in the stock market back in the early 80s. Wow. and the mid 80s, which, was kind of funny. You had to literally, I would ride my beach cruiser up to the stock brokerage office and make my trades in the morning and come back the next day and either let them ride or sell them. And it was just kind of funny. And I always had money in my pocket. I was always one of these guys that always figured out a way how to make a buck, when I was younger through hard work. And then of course, real estate in college. I started my college and I started real estate in 1983. I was selling limited partnership interests at Callaway Gardens, believe it or not, where they would hold the masters on the villas and the masters. And that was kind of a fun thing. And so I really got my taste of how to sell and what to do on that side. So it was kind of mixing all my investment sales side as well as my understanding of stocks and things of that nature.
Yeah, so I want to talk about the stock market trading for a little bit because that's interesting. You know, I actually just recently got into investing in the market. I would say in 2020, like with coronavirus presented a pretty unique opportunity for us, but it's relatively new to me. So what you said you were a day trader, like what kind of stocks were you trading? How did you know what to buy, and did you have more importantly a good track record in doing it?
Well, so I'm going to give you some advice in this answer. First of all, I am not a proponent of day trading in reality. Okay. However, I am a huge believer in buying long term and investing long term and creating wealth. When you day trade, you make income. When you invest long term, you create wealth.
Nice.
And
I like that.
and when I was younger, I started creating a lot of wealth by buying solid companies like the Microsofts, the Intels, Facebook, Google, Amazon, Apple, Baidu, all the technology companies. And I was buying them early on. And literally I have millions and millions and millions in the market, literally millions and millions and millions in the market.
Wow.
And I a lot of them, I let them roll and I just continue on. A lot of people say if they hit a 30% return, they're disciplined sellers. I'm the opposite. I let my winners run, and as soon as I lose 20% to 25%, I sell that and I'm out of there. I'm gone. Yeah. I am quick to sell my losers. I would tell you I know how to sell my losers very well, and I'm horrible at selling any good stock at all. And I normally don't. I hold it for years. As for the day trading, back when I was younger, what was happening was there was no internet, there was no cell phones, there was no nothing. So you literally had to go to the stock brokerage office, sign a trade sheet. They would execute the trade, and then you'd have to go back. And the only way to really look at your stock trades was to call up the stock brokerage office and ask for the quote.
Wow.
Or watch literally in the morning. They didn't have a CNBC back then, but National Public, PBS, the Public Broadcast Service, had times where they could tell you what your stocks were doing, and they would run a ticker tape. And that was one way to figure it out. So when I was doing that, I was looking to make nickels and dimes back then. And when I say nickels and dimes, I mean, I was making, $300, $500, $1,000, $1,500, and that's a lot as a college kid.
Oh yeah.
When you're only investing, call it $5,000 to $10,000 at any given moment, right? And so that was kind of one of the things. I also got very good at trading, and I would sell puts and sell calls. So I'm very good on what I would say on the side of the options trading, and have done very well with that over the years. But that's just for income and for just for the fun of it. But realistically, there are some stocks that I will tell my team or some of my other groups that will listen to me, or I'll go in and say, for example, Simon Property Group was trading around $55, $60, and it was traded as high as 170, 140. And when I told my team, I said, guys, as soon as COVID lifts a little bit, it's going to go from that $50 to $100 in no time. And sure enough, it's at 115. That was a trade going in. So my point being is, if you go in with a long-term position, stay long-term. Don't be tempted to sell it. If you know you're going to go in with a sale and you're going to go and hit this price and set your sell order, be disciplined that way. But I tell all of my young folks that that I mentor, get a stock account. I like Ameritrade. I like any of those others. I'm not big on Robinhood. I like the other accounts because you can grow with the other accounts very well, and then you could. There's a lot more versatility in those other companies with their trading platforms. So there's a lot of that goes on. So that's what I like. So my point being is this: if you want to get wealthy, you buy and hold stocks forever. So let me give you one case in point. I bought 1,000 shares of Apple in 2006 for $65 a share.
Wow.
That thousand shares had a 7-for-1 split, which turned into 7,000 shares. Okay. Now, the Apple split last year during the pandemic in August, 4-for-1. So you take the 7,000 times 4, which is 28,000. That's where you get 28,000 shares of Apple. By the way, on a $65,000 investment that I didn't sell. So my point is that's just one of the success stories. I hold about 40 stocks in my portfolio, long term. So that's just to give you an idea of one holding that, Apple, Google, Facebook, Amazon, all those are just really, and I could go down to the rest of my portfolio later if you wanted, of all the stocks that I do own, and I own them long term, and I let them ride, and that's the key.
So I have a question, because I think this is great advice. But I think buying a stock is like easier. It's knowing when to sell, when to get out. And I understand what you're saying. You don't ever sell the winners, but they're not all of them are winners. And you mentioned earlier, you got to, when you get down to a certain percentage, that's when you decide to sell. However, at one point, Apple would have fluctuated down, below 20-25% of your entry point, I'm sure, because it fluctuates a little bit. So how do you decide which ones you're going to hold versus which ones cross your threshold to sell?
Look, there's all sorts. I'm a long-term believer in those other stocks. They've got a really good business, and and the business is growing. I like growth stocks, whether it's in healthcare, whether it's in technology, whether it's in consumer goods, all those. I like high growth stocks because they have a real growth. It's a real business. They have a real balance sheet. Those are all things. I'm not a speculative investor in that standpoint. I'm just not. So, I'm not going to go buy GameStop. You know what I'm saying? I'm not that kind of guy, right? It's, I know it's tempting for a lot of people, but you know what? GameStop, I was telling all my people, it's, by the way, I always sell puts, but I would never have sold it. I would have bought puts on that and let it ride all the way down, because that's what it was. I knew the stock was coming down. There was just no way it was ever going to sustain that. Right. And that on the way down. And I never, by the way, I'm not a big guy who shorts stocks. I believe in a long play. And there's one thing you have to learn. Your return, if you hold a stock long, your returns are infinite. Okay? They can go forever. If you end up shorting a stock, the most you can lose is, and I mean, the most, you can gain is 100%, right? Because if you're shorting the stock at $100 and it goes down to zero, you made 100% on your money, right? So the point is you're going against the grain. So I've never been a big believer in shorting stocks. It's just, it's a way to hedge things if you want, but there's other ways to go about it. But my point being is long-term investing. I have my kids who my son's 23, Merritt, which you remember him. He's in the music industry. He's been doing photography, creative design, and marketing, working with groups, working with A$AP Ferg, working with, Post Malone, Future, all these guys. And he's made a lot of money, and he's been investing in the market, and just bought his first house. He bought a $500,000 house on his own. Yeah, on his own, and he did this. So these are kind of cool things. And my daughter, who's a major social media influencer, she's one of those people you read about. She makes a lot of money every month, and she's investing all of her earnings in the market. Why? Because, compound interest is the eighth wonder of the world. If you don't understand compound interest, learn it.
Yeah, I agree. And I'm right there with you on the day trading too. Personally, day trading to me just has a bad connotation with it. And I don't know if that's a widely accepted connotation or if it's just from the people I follow, but yeah, you just lose out on so much of that growth. I mean, you're always in and out of the market. You never hold it overnight. And personally, I think it's it's a great way. Like you said, you might make a little bit of income, but you're not really going to grow wealth, and the time that it takes up, I mean, nobody can time the market, right? The market hits early or it hits late. or or like you just can't ever time it perfectly. And so yeah, I'm in agreement about getting those stocks that you have high conviction about. Now, how you get that
Yep.
conviction, that's another story. Obviously, there are certain ones that it's like, yeah,
Well,
Google not going anywhere anytime soon, right?
yeah. Yeah, right. I mean, for example, I just bought Airbnb at $180 a share. So Airbnb, I believe in the story, and I think post-pandemic, they've got a really good story. But people said, Mike, the stock was up 20 points today. You bought it. I said, look, I don't mind. I believe in this stock,
Yeah.
and it's got some growth to it. And what's funny is I bought it at 180, and 3 weeks later it's at 220, and then back down to 180. I'm not a seller right now,
Right.
and it's like Bitcoin. I bought Bitcoin at around $10,000,
Nice.
per coin, and
Was
so
that
and I
last year,
own,
2020?
yeah, I did buy it in 2020. Exactly, that's right. I bought it back in like August, and I believe so. Bitcoin, and we'll shift for a second, if you will. We'll pivot. Is Bitcoin? I am a true believer in Bitcoin. For many reasons. I believe it's going to be an alternative asset class. When you look at a lot of the major banks, the investment houses, the wealth managers, they are all now looking to allocate a portion of some kind of diversification into Bitcoin. And there's several ways to do it. You can actually own the coin, or you could go through something like Grayscale Bitcoin Trust, GBTC, which is the symbol. You can hold it there and come in and out like it works like a mutual fund, if you will, or an ETF, if you will. It's a great way to own it, and it kind of tracks, the Bitcoin, evaluation that when it goes up, it does that. So,
Is that what you have?
when you think about I do have that as well. Yes, I've got both. I do own the coin, and I do own through a Coinbase account, and then I own through Grayscale. I own a majority of my holding through Grayscale Bitcoin Trust.
Okay.
So the interesting thing is that when you look into this and I try to tell people, Bitcoin is different than the other cryptocurrencies. Even though some of them, whether it's Litecoin or Ethereum, they've got a little different usage within, the commercial space. But Bitcoin, as I said, is almost becoming an asset class. And what I like about it is when you start to think about gold is an interesting thing because everybody kind of compares it to gold. Back in the biblical times, gold would buy a nice set of robes, really, really nice. You would be really well dressed in biblical times if you spent an ounce of gold on your clothes and garments, right?
Mm-hmm.
Today, I buy a suit today, and my suit's $1,900, $1,800, right? Oddly enough, that's exactly what an ounce was.
That is
today.
great. I have heard that, and
so
it is mind blowing.
Gold in reality, gold in reality is buying you the same garments as you would, which would be a nice suit today. So I use that analogy because it's kind of interesting in its own right.
Yeah.
So I believe at the end of the day that Bitcoin is a really interesting asset class and also a way of trading dollars. And you might have just read, we've just taken on a major nightclub listing. My team, so in the commercial real estate space, our team does about $1 billion a year in deals.
Nice.
That's our team that's based out of Miami. We've got 6 client-facing partners with myself and John Crotty, David Duckworth, who are the main partners of our team, and we have some junior partners, and we focus on office, industrial, retail, and what I would tell you, unique assets like this club I'll tell you about, auto dealerships, and very, very unique land deals, large land deals, and or transformational land deals in downtown CBDs and things of that nature. So when we took on this listing of the Treehouse nightclub, this nightclub was doing in its heyday $35 million a year, right, in revenue.
Wow.
It's got an appraisal. It's got an appraisal for $30 million alone in 2015 just on the real estate, another 10, 15 million for the business. So you're talking a $40 million situation here, an evaluation. So the seller who is very creative and very flexible, I suggested, why don't we go look at taking Bitcoin? There's been the run up in Bitcoin, a lot who own lots of coins, and they've got a very low cost basis, and this is a way to transfer that into a hard asset that also is a moneymaker through the nightclub. So these are some really interesting thoughts, and that's kind of where we were going with this.
Yeah, no, that's fascinating. I got a million questions running through my head, but I'll keep it to just a few for time's sake. But I think there's like a couple different viewpoints on Bitcoin. I'm personally bullish, and like I think it's hard to say if there's like a right amount or a wrong amount to having your portfolio. I mean, I think the wrong amount is zero, right? Like 0% of your portfolio is the wrong amount. But I mean, how much do you think is too much? And I'm curious, like, what percentage of your portfolio is in Bitcoin?
I've never really figured it percentage wise. So it's not like buying Apple where, it's going to pay yourself a 1 point something percent dividend, right? And you have price appreciation. You've got, billions of dollars in revenue. Okay. That's a real business. And you're going to sit there and say to yourself, this is a long-term wealth builder. You have to look at it as, listen, I believe it's an asset class that's getting widely, it's gaining wide acceptance. But if you're wrong, how much are you willing to lose? Okay, and it's not a gamble. It's just it's understanding the crazy fluctuation, volatility that it has, as well as you never know what's going to happen with it, right? So I think that's a better question as opposed to a percentage. And go from there. But to answer your question, I have hundreds of thousands of dollars in it. Okay, so that just gives you a little bit of a, idea.
Yeah. So if it all went to zero, it would hurt, but it wouldn't bankrupt you by any stretch of the imagination.
Not at all. No. Yeah. But I also believe, and I am also bullish as well. And I think that Bitcoin, if it continues to do what it does, I think it could have a massive run up over the next several years. And I think it will gain more and more acceptability. Again, this is my opinion, personal opinion, not my professional opinion.
Yeah. My next question was going to be, what's your price target?
Look, it's crazily enough. When I first got into it, I would have never thought it was going to go to 50 grand as quick as it did. Right?
Yeah.
Never thought it would. But at the same time, I've read a lot of things and I've heard a lot of pundits talk about it. They could see, within the next 24 months, $100,000, and there's others saying 400,000 in 5 years, and some are saying maybe even 1 million. I don't know. You know what I'm saying? I mean, I think it's kind of interesting on how everybody's speculating on the value of Bitcoin. I think it needs to mature. I think it needs to gain more acceptability. I think as time goes on, it'll probably become less volatile, in my opinion, as it becomes more acceptable. But those are some of the things.
Yeah, I mean, the market, I think, is still trying to price it, right? That's why there's so much volatility. I mean, I started acquiring a lot in November and then again in January of last year, a little bit in April too. So like, I obviously, you always wish you did more than you did, right? But
listen, I mean, hindsight's 20/20.
Yeah.
I think what you need to do is just know, listen, the worst thing is not to have anything. And that goes for the stock market too. It means if you're not involved and you're not there, guess what? You're not in the game. That's the key.
Well, I think, when you account for risk, it's got the most upside in that sense. Like, sure, other coins have like more, quote unquote upside, but how many cryptocurrencies are you willing to invest in that can go to zero or lose everything, right? 10, 20, 30, 40, maybe one of them will hit it big, but all your other ones you're going to lose. And so I think when you account for risk and the fact that it's already gone through like, a huge downturn and gone back to all-time highs from 2017 is an indication to me that like the downside is somewhat mitigated, especially like you were talking about, with every institution that takes it on, it becomes more and more sticky. And I know one argument against Bitcoin would just be the fact that there's no intrinsic value. And I understand that, but to me, the intrinsic value lies somewhat in the fact that you can actually use it to make transactions like instantaneously, right? So it's like you could theoretically buy Bitcoin. Like if you wanted to do a large real estate transaction, theoretically you could buy a large amount of Bitcoin, right? Transfer your cash into Bitcoin, send that Bitcoin over, and then they could take that Bitcoin and transfer it back into cash. So it's not, in that sense, it's not a store value. It has intrinsic value in how it's speeding up the transactions. And the problem with the other cryptocurrencies right now is they're so much more volatile than even Bitcoin that like by the time they get it and cash it, like it could change. And at least with Bitcoin, it's like, okay, it is volatile, but at least for an hour, you can do somewhat of a transaction. And
and this is interesting because we're contemplating this one transaction. The Bitcoin and a real estate transaction, we've contemplated bracketing. So if we come up, let's assume we've pegged the value at $30 million and trading at Bitcoin today, it's probably 340, 350 Bitcoin, right? And again, I haven't done the math, but just assume that for a moment. We would bracket the Bitcoin value, at some percentage or some number higher and some number lower. And the key would be is that if it fell below that, you would have to, throw in some more Bitcoin, or if it came above, you would take away some Bitcoin. But you'd have to leave some swing room there, is my point, by bracketing it.
Right. And so so that's exactly what I'm talking about. Like that's the intrinsic value, right? Because that transaction can be done a lot faster than bank money, where it's like even Starbucks, where you go and you swipe your credit card and it costs $5 and they give you your latte, like it takes 3 days on the back end for that money to settle. And it might even take longer before it hits the bank account of the owner, right? Of the vendor. And so it seems like you guys are coming to that same conclusion too, even though it's like,
Well, but but you got to remember, real estate transactions are they do take time. I mean, you have inspection periods.
Yeah.
You've got all sorts of other things, and to go into a contract, you have to have a reasonable valuation of what the transaction is going to trade at, and then you have to have a reasonable idea of value on the Bitcoin if you're trading in Bitcoin.
Yeah, no, that's true. And I heard somebody say, look, yes, of course there's volatility. Do you want a volatile path to to 100% return, or do you want a very steady, slow path to a loss of 25% if you hold on to cash, right? Like if you hold on to cash at the rate we're printing money, I mean, it's going to get devalued sooner or later. So it's not very volatile. It's very safe. It's a very safe investment. You can be guaranteed slowly lose the value if you hold it in cash, or you can through volatility, like make gains over time. And it's like, if you can stomach it, like you're saying, the upside, it seems like it's the right time, at least for now.
Yeah, that's exactly right. So I like that. So that's kind of what's going on. You know what I'm saying?
Yeah, no, it's really cool. And then briefly, I know with Miami, I read something about the mayor wanting to switch to holding their assets in Bitcoin. Do you want to talk about that, or what? I don't want to misquote what I read, but what's going on there?
So what was that? Say it again. Say that again.
I just read something about. Yeah, I read something about how the mayor of Miami is wanting to start to use Bitcoin, like maybe switch some of the assets to holding in Bitcoin. Is that accurate?
Yeah, well, look, I don't know if that's totally accurate. What I think, the mayor is talking about is literally creating a hub here for fintech, as well as technology and other financial currencies. So if you look at London, New York, and all these other groups, these other wonderful cities, LA, they all have their own benefits. And I think by having a city in Miami that is a fintech city that is progressive and aggressive in what they're doing, I think it could, and also really utilizing technology to its real utmost potential, you'll start to see where Miami could really benefit very, very well. And we already have a lot of groups coming here. We already have a lot of look, what's interesting, Miami, Florida is within 3 hours of 30 different countries.
Wow.
Think about that for a minute. And granted, there are a lot of Caribbean countries and Latin American countries and Central America, but that's okay. That's the uniqueness of Miami, Florida. So when you start to think about the currencies that are in all of these countries and what I call flight capital of those countries and valuations and devaluations of currencies of those countries, you start to see, a really interesting trend there, in my opinion, where, fintech starts to, yes, Bitcoin is very volatile today, but it's also interesting to see what will happen with, all these other investors and or traders and or technology driven, companies are going to come and start to realize that, hey, listen, we've got some really interesting potential here in Miami, Florida.
Yeah, I think that's great, and it's such a good way to capitalize on that. So, is I know that part of your role is managing director of Miami, Florida. Are you involved in that at all?
Yes, tangentially, yes, because what happens is we're always, our Donna Abood, who is my long-term real estate partner, is focused on leasing, and she does a lot of leasing through different progressive companies. I mean, she's dealt with banks and other fintech companies, as well as other global companies, as well as entrepreneurs who are going into these think tanks, as well as healthcare too. So she covers the gamut. So a lot of that's done through creating space for these companies to come and lease and to have all the right amenities, and as well as all the needs that they need to have met for such business. So we get involved through the Beacon Council. We get involved through different trade groups and things of that nature.
Okay. Yeah, no, that makes sense. And so one of the things, back to Bitcoin real quick, I personally kind of see it as a check and balance, a form of checks and balances for the US government, for fiat currency, for the Fed, and the way that they can essentially print money or create debt with a click of a button, because they have a monopoly on the entire financial system. They have a monopoly on the dollar, which is not unique to America. I mean, tons of countries have central banks and they operate on the exact same fiat system that we do. I'm curious if you see Bitcoin and cryptocurrencies as sort of like accountability for them to be like, well, maybe we can't just do whatever we want anymore, because now there actually is an alternative.
So you're talking about some great things, and when you start to look at the value of the dollar, the value of the dollar has been dropping for years. Okay, so just start there. Remember in 1972 that we went off the gold standard. So now we're back, as you say, printing our own money and creating our own currency. And when you start to think about countries like Russia, China, U.S., they print their own money, right?
Right.
And if you want to study something interesting, study modern monetary theory. Okay, modern monetary theory. Now, I am a Republican by background, but modern monetary theory is we're kind of there right now. We're printing money, right now, and we have to watch inflation, and inflation is going to be the thing that will stop the musical chairs, and it will be not fun. So, but if you can control inflation and you can watch inflation and do those things, you can print as much money as you want as long as you watch inflation. I mean, look, being in Miami, you see all these currencies, and if you take, a dollar of the U.S. dollar, I mean, it's worth, 25,000 X of whatever, or 50,000 X, or a million X of certain countries, denominations, and that's inflation. That's inflation at its best, and what happens. So we have to be careful with that. And I think it's one of those major things. Do I think there's a balance? Yes, I do believe there's a balance, but also you have to think about when you're printing money, what are you doing with that money? Are you building infrastructure? Are you putting assets on your balance sheet? The funny thing about the U.S. government is, it's got lots of liabilities. I don't even know if the U.S. government really knows what all their assets are. So that's just my opinion. I don't even know if they know. But if you look at assets of roads, look, that's a hard asset, right? You put it, and it's going to create more commerce. It's going to create more, more space to work in, efficiencies, all those things. Putting your money into certain technology or healthcare or things that those become assets, right? So I think when you look at with the slippery slope that we've been on for years, Bitcoin literally is a unique situation in where you will see the uniqueness of how people perceive the dollar compared to the cryptocurrencies and how they operate within the market and the either appreciation or devaluation of it.
Yeah, it's gonna unfold. It's gonna be interesting to watch it unfold for sure.
Yes, absolutely.
But, the only thing I can really see disrupting Bitcoin is a competitor. But like the analogy that you gave of different fiat currencies, the way I look at it is like, the peso, right, or whatever South American country uses as a currency. That's technically competition to the US dollar. The US dollar has so much more market share that is the gold standard, right? And so I see Bitcoin is kind of the same way. There are competitors that come along and they do the same thing as Bitcoin, but Bitcoin has so much more market share that it will have that much less volatility. It's already proven itself. It'll be the gold standard. And it's just a question of like, to me, it's got a 5 to 10 year run rate before we even have to start thinking about that. I'm curious if you thought
right. Well, look, competition. It's funny you say competition. Look, there's over 1,500 cryptocurrencies or 1,200 cryptocurrencies already. So when you start to look at cryptocurrency, I think companies will start to look at their own cryptocurrency and their own trading value, depending on what it's going to be. So Amazon or Facebook or Walmart or any of the companies can create their own cryptocurrency to use, and they will then, it's almost like having airline miles in their own way. And value, I mean, look at the value. Think about this. So, when you charge your charge card and you build reward points, think about the different valuations that they give you on your reward points already for certain things. Some they're going to give you 100 cents on the dollar. Some they're going to give you more. Some they're going to give you less. And so that's already a fluctuation of a cryptocurrency or some other type of, currency, if you will, that is, traded up and down.
Yeah, that's a good point. That's a great perspective. So, and all this is interesting. It's. I know we originally decided we wanted to talk about commercial real estate, but I think this helps paint a picture because commercial real estate is still affected by these different factors. Cryptocurrencies, the Fed, the market, what it's doing. So I think all of this is very relevant. All of it ties in.
Look, you have to look at something. The commercial, which we operate every single day on the commercial real estate side. So we do probably 30-40% of our business in South Florida, another 20-30% around the state, and then the rest is around the country. And when we look at this, when we look at commercial real estate, there's so many different variables and factors. We work with Fortune 500 companies. We work with different private equity groups, hedge funds. We work with the large investment groups. We work with all the institutional groups as well as the private client side. So we're very versed in the issues of what is driving certain markets, product type, and whatnot. For example, logistics, the Amazon effect, if you will, industrial space is just very, 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 very hot in demand and things of that nature. But today, in general, under the commercial real estate space, there is so much money out in the marketplace for either it's just two assets. You're looking at the equity side, which is the stock market, or you're looking at the issue of commercial real estate. So stocks or commercial real estate, and or variations of both of those.
Mm-hmm.
And you're not going to be investing in the bonds right now. I mean, the bonds are only going to go one way up. I mean, you could it's just looking at, and that's also where Bitcoin still falls into another alternative investment outside of some of these things. But look, commercial real estate in general is a great asset class, and I firmly believe that we will see significant gains post-COVID. I think a lot of groups, there'll be changes. I mean, how we operate, how we review office buildings or retail, or all of the things that have changed. But also, I think a lot of stuff is going to come back even bigger and better, and even more creative. So you start to look at these different asset classes and what's out there. So we know there's a lot of money out there. The question is what are they going to bet on once they understand what the bet is going to be? And I think that's what the key is.
Yeah, no, I agree. It's funny, like the whole concept of the printing of money to help the low income people is so ironic. Like, yes, you do help them put food on their plate this month, but you're hurting them this year and next year and the next 10 years, because when you print money and you put it out, like, you are ultimately going to create inflation. And so what happens with inflation is those who own assets do well. Their net worth increases. Those who are wage earners without assets do not, because it takes longer for the inflation to catch up with the wages, right? And so it's ironic to me that we think that we're helping these people. And I'm not trying to get political about it one way or the other, but it is what it is. It's like you think you're helping these people, so we print all this money, and all you're doing is compounding the problem, because the government interfering, historically speaking, has not done a good job as just letting the market shake out. And yeah, will people suffer for the next month? Will they suffer for a couple months during the lockdown? Yeah, they would have. But long term, over a couple of years, they wouldn't have suffered. And so yeah, now we have this interesting situation. Like you said, there's a lot of cash on the sidelines, and it's going to get very competitive.
Absolutely, and it's going to chase opportunity and yield in a different way that we've seen before. There was a study done of people of 18 to 50 years old, and people were asking, what are you going to do with your stimulus checks? And 50% of them said they're going to go open up some type of trading account and go to the stock market, and they're putting in some portion of that stimulus check, which I thought was interesting. So I think we're going to see some interesting things going on in the next several years. But I also believe, look, we've had a hell of a run in the stock market. We've regained back all the losses. I think the stock market, I think we're going to have some really great companies continue to do really well. But I also think we're going to have some, I think we're going to have some, a little bit of a hiccup here, maybe later this year or, during this time. And so, again, those are great times to be buying. So there's just a lot of interesting situations here.
Yeah, no, I mean, we could go for hours and days for sure about all these different topics. But what do you see happening in commercial real estate? So like, do you have a specific industry? Like, for instance, we really focus on kind of healthcare and to be more specific, retail healthcare, just helping them do analytics, demographics, competition evaluations. And then we'll either broker the spot for them or we will develop for them. Like we'll buy and lease to them. What are you in anything specifically, or are you in multiple classes?
I would say as I told you earlier, we handle office, industrial, retail, and these large land situations, which create unique opportunities, whether they're large scale developments in CBD downtown areas or larger land tracts in and around the state that also start to become transformational. We start to look at those. So we look for opportunities for the investment groups in any of one of those asset classes, and I think it's in the beauties of the beholder. When you start to look at what asset class, some people like distress, and they're going to go for more of a distress class. Some people like to have continued gains, and they'll look, into that industrial class, or they're looking for, asset shifts within asset classes. So, we as investment advisors in the capital markets / investment sales side, we're always helping our clients kind of look forward to where do you want to sell, what do you want to buy, and where you get into some of those situations. And your niche of the healthcare retail niche again is growing. I mean, you look at all the different the really the quick med, the the med spas, to the dental. Everything is going on right now in so many different ways that drives different components of the commercial real estate. Retail has got its own pluses and minuses. So, and as I told you, even office, the way we work on a daily basis is going to change. We have some of our own reports, and it's probably going to be 10 to 15% change in reality, but it's not going to be a 50 to 100% change, right? So there's pieces of those components which get better, and things of that nature.
Yeah, well, one thing that definitely helps is the fact that you and I both live in Florida, and we have been one of
really
the huge winners of the pandemic. I mean, the fact that for the most part, I mean, we locked down for about 30 to 60 days, and we pretty much stayed open. We didn't have any statistical difference in death rate or contract rate than all the states that locked down, and people are flocking down here like crazy. But do you, I know you're located in Miami. Are you doing things nationwide?
Yes, yeah. Probably 20% of our business is nationwide, and then the other 80% is around the state of Florida. So, and probably of the 80, probably 30 to, or probably 40 to 50%, is South Florida driven, and the rest is around the state. So, we're very bullish on Florida, needless to say.
Yeah, and I'll give you my opinion real quick on where I think we're going, and you can feel free to agree or disagree. But a lot of people are always asking me, like, hey, recently, like in the last year, should I wait to buy? Is there going to be a dip? Do we see commercial real estate going down? And my answer is, look, it's different. It's not 2008. It's not a financial crisis. It's a pandemic. So there's not a liquidity issue. There's not a value equity issue. It's the fact that you've got these. When you think that, okay, we've got Amazon and now we've got the pandemic, this all combined together is going to really hurt commercial real estate and especially retail real estate. But at the end of the day, what people don't realize is that e-commerce creates a demand for a larger square footage amount of commercial real estate because of all the different supply chains they have to go through, right? And so while, yes, you do have some commercial retail A-grade spots going under, such as like maybe a bar or a restaurant that's in like a really cool spot, what's happening is that the people who are doing well, that are maybe like, for us, we're in healthcare, right? And a lot of times they take up, like, let's just say B-grade retail, because the A-grade retail was inaccessible to them. So now maybe that restaurant or that bar went under, that space opens up, like just as one example of many. And now those healthcare spots that didn't have access to it, maybe it was too expensive, or maybe the landlord said no because it wasn't sexy enough, right? They can now have access to move in there. And so you kind of get this trickle up effect where it's like, the B grade can move up to those A grade that's available. The C grade retail can move up to the B grade, and the D grade, where now that would be kind of a loser, is actually affordable for warehousing, for industrial, because that's growing so much. Like Amazon is expanding so fast. Everybody who's involved in e-commerce and shipping is expanding so fast. They're able to take up that spot. And so there's nothing's going really like vacant. Maybe office is getting hurt a little bit, but it's getting repurposed and reused. And so it's like, hey, if you're waiting for a discount, you might have to wait indefinitely. What do you think about that?
Well, look, there's three things. One thing is disruption always creates opportunity. Okay. So if you're not taking advantage of anything in any business where there's disruption, you're missing opportunities. So, to get back to your point, listen, there's going to be some asset shifts. There's going to be some demand shifts. There's going to be use shifts across the board. And the key is spotting those early trends or spotting those for the businesses that you're in. And I think that, we are all going to learn how to work differently, how to play differently, and how to find opportunities. I will tell you, I was so impressed with all the businesses across not only Florida, and I think that they were resilient and really creative, and they found their own opportunities. So when you start to look at that, that creates those things. We were involved in a lot of the Sears and, the repurposing of certain Sears and selling certain Sears. And so, again, that's repurposing of space, finding out the opportunities and looking at that. And when you really start to look at certain things, it really is kind of neat to see, in my opinion, what those ideas bring opportunities. So, for us, looking at different real estate in general, you start to see different, trends. And one of the interesting trends is, and I found this to be very interesting, was somebody said to me, they said, Mike, and I knew the answer too, which was kind of funny. They said, how much of all retail sales are done over the internet? Okay. And, at that time, I said, I don't know, 12, 15%. And people, and all the people in the room were saying 80%, 70%, 60%. And it was literally like 15% at that time.
Wow.
So
this
when
was
you
recent,
think about,
didn't it grow from 10% to 20% in the last year or two?
Right. So that's the point. So that was pre-pandemic. Okay. Today, the numbers, and I've heard, and there's some, is anywhere between 23 and 28%.
Okay.
And that acceleration of that, call it 10%, was condensed into 12 months, which some would argue was a 5-year growth period. That was a fast forward to 5 years. So it forced, and again, that's the disruption. That's the difference of what does it take to do certain things. And, and there's certain companies that are just really taking advantage of it. And those are the kind of cool things. So at any rate, I mean, look, when you look at investment real estate and you look at whether you're buying or leasing, you really are looking for the really great situations that you have and those opportunities during disruption. That's the key.
Yeah, no, that's so good. That's so good. Well, yeah, I want to be respectful of your time. I know we booked until 5. So if anybody, wants to follow your story, or they want to reach out to your firm for help with doing business in Miami, or with, some of those larger commercial real estate, what's the best way that they can do that?
They can email me anytime at michael.fay, spelled F as in Frank, AY, at avisonyoung.com. And that's spelled Avison, AVISON, Young, YOUNG.com.
Okay, well, that's fantastic. Yeah, I will put that in the show notes. And this has been super insightful. And I definitely appreciate you coming on today.
My pleasure. It was great. And thank you so much. And congratulations on all your success post-pro wakeboard career.
Well, I want to be like you when I grow up. I can only hope.
There you go. You'll be a vet. You'll be a pro in commercial real estate, and you'll be a veteran champion in wakeboarding.
There we go. That's the goal right there.
All righty, buddy. Thanks.